Hello, happy people. Good morning to you all. Happy Friday to everyone in the house. Let's do what we do in the morning. Let's get this started and confirm that we are good to go. So, if you can see my screen, you can hear my voice clearly. Please type in hi in the comment section so that I can get a feedback that we are good to go this morning. So, I will appreciate to see some comment, please. If you can see my screen, you can hear my voice, please type in hi in the comment section. Okay, let's see what we have. All right, I can see Choki. Good morning to you, Choki. Thank you very much. Sarge82, good morning. Thank you. Gambnai, good morning to you. Thank you very much. Teprometheus, good morning. Oh, Teprometheus is new here. Good morning to you. Glad to have you around, guys. And hey, Carrie, I see you, Carrie. Good morning. Thank you very much. Kangaroo, good morning. Thank you, thank you, thank you. OZ9 Force comment says AUD USD. Okay, let's see how we can incorporate that into our plans for today. 828, thank you very much. I see your comments too as well. So I think we are very positive this morning. I will take this as a confirmation that we are good to go and we are all pumped up and ready to be part of the last trading day for the week and as well for the month too. On this note, I'm so excited to welcome you all to yet another promising session on the Extreme Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host as we are going to be going into the market together to review the charts from a technical standpoint with the utmost intent of identifying potential trading opportunities lining up for us today. And considering the fact that today is the last trading day of the week, definitely we all know what is expected when it comes to the last trading day of the week, as majority in the market will be doing some rounding off on their positions by taking some profit off whatever positions they have in the market, which shall definitely reflect on the chart as price action moving in the opposite direction of where price action of the proud leading price action. So all these situations here will be taken into consideration while we review the current market structure. And for those who are joining us for the first time, I'm so excited to welcome you on board. It's a wonderful moment whenever I see newcomers in the house. So what we simply do here on a daily basis is to review the financial market in anticipation of the New York session so that we can identify a trading opportunity. So we do have a series of instruments that we have been monitoring since the beginning of the week. So on a daily basis like this, we come here to review how well these pairs are doing and then anticipate what to look out for ahead of the New York session. At first, it might look a little bit overwhelming at first since this is your first time with us, but I promise you that with time you will get to understand how this works and you will be able to use the information you have gathered here to make your individual decisions when you're about to make your own trade. So once again, I welcome you guys on board and let's dive right into the business for today. And as usual, you know what we look out for at first. We want to be keeping tabs with the fundamental aspects of the market by checking the economic calendar if we do have any high impact macroeconomic event to look out for today. And you know how important the macroeconomic events are, as we need them to serve as a catalyst, as the event always brings liquidity into the market in the form of price movement, and this is all what we need in order to make profit off the chart. So identifying when this event is coming up will be serving as a good timing for us to position ourselves ahead of the new week. So on this note, let's get started today. And from what we have here on April 28th, Friday, we have the features from the Japanese economic doke, which already happened earlier on today, and that is the monetary policy statement, the Bank of Japan interest rate decision, and the press conference. But what we can get in from here is the fact that the interest rate decision has remained the same. And as a result of this, we've seen some interesting traction on the USDJPY, which we will be reviewing as we dive into the chart. So on this note, let's dive right into the chart to start the day with our usual commodity, which is the US oil. And on the US oil, what is going on this chart? Now let's start with how the week started for us on the US oil. And it is important I state here that the US oil has been one of the most profitable trade amongst the instruments that we have been monitoring this week. And as you can see here, the week started on a bearish note. We saw our price action started the week at the $77.65 level. As you can see here, price action dropped into that demand zone at the $77.69 area. So we had a little consolidation phase where price action was trapped within this range for the first 10 hours at the beginning of the week. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of the resistant line for buying opportunity or the breakdown of the support line for selling opportunity. And with our buy stop order above the resistant line here at the beginning of the week, we had our first buy position triggered as price action broke out of that structure. We also added more position at the breakout of the $78 level, and at the end of the day we were able to scoop roughly about over 100 pips on both positions after the sell pressure resumed in this market, hereby taking us out of our position after we have moved our stop loss accordingly to lock in some profit. And going into the live session on Tuesday, we saw this old situation here where price action was trapped within this channel between the $78.85 level and the $78.55 area. And the breakdown of that structure also welcomed the sell position, and it was at this point we begin to sell the US oil, and we continue to add more position as we rode the move all the way to the downside. And look at what has been happening in this area since price action tested the $74 level a couple of days. We have seen our price action appear to have transitioned into a channel which is right between the $75 mark and the $74 area. So we have a very tight $1 range right now where price action has been trading in the last 48 hours. And what this simply tells us is that there is an indecision in this market right now where participants are still not sure if price action will be going further to the downside or it will be going into a reversal phase where price could break out of that trend line at any point in time to incite a bullish momentum. So all this we are going to be looking in detail here during the live session. And before we go into the detail of what our expectations are, I would like to call our attention into a structure that we identified on the 4 hours time frame that was on Monday. So look at the 4 hours time frame here. You would observe that it has been bullish on this chart, and the old retracement, the old bearish move we have been witnessing here in the last couple of weeks has been seen as a retracement of that previous impulse leg. So we had the impulse leg here started at the beginning of I think in the middle of last month. We saw this impulsive move, and this old bearish momentum here was considered to be a retracement phase. So we decided here that we want to project where the retracement phase will probably end before the second wave of the bullish momentum will happen. And in order to do this, what we did here was to bring out our Fibonacci retracement tool, run it through the previous impulse leg here, which we have here, and aim at an area within our golden zone area, which is always within the 50 and the 78.6% of the previous impulse leg. And that is how we got to this point that we are in right now. So we had a very wide range here where we said our TP target for any sell position we had a couple of days ago is going to be. So we do have a TP target zone around that area. So for those who are still in the sell position here, you want to be securing your position, as we might be having a bullish momentum anytime soon. And remember, we said something about this whole structure here. We said that this area will be our TP target zone, and at the same time it will be a buy zone if we begin to see a reversal patterns or buy pressure coming in around this area. And if we take a closer look at the old structure that we identified here that has been going on here in the last 48 hours, we confirmed that price action has been within a choppy situation. And one important thing about this old structure is that the $74 level here has been a very strong demand zone, as you can see here. Since the test of that structure on Wednesday, we saw that every attempt by the sellers to break down the structure has been met with strong resistance from the buyers. The same thing also happened during the early hours of today. I think about a couple of hours ago, we saw buy pressure resume again around the $74 level. And now the question going into the New York session today is, will this whole setup we have here turn out to be a reversal pattern where a breakout of the trend line will be a signal that the bullish momentum is gradually gaining traction to incite the second wave of the bullish momentum? And the second question here is, will this whole setup here turn out to be a trend continuation pattern where a breakdown of the $74 level will confirm the strength of the sellers here to incite another sell-off in this market? So these are the things we are going to be looking at today. So we are looking out for buying opportunities at the breakout of the $75 level, which shares a confluence with the trend line, and the breakdown of the $74 area for selling opportunity. So in that regard, we shall be scaling back down into the 1 hour time frame so that we can position ourselves in such a way that we can catch any of this potential opportunity that is likely going to be happening during the New York session today. And one other thing I would like to lay emphasis on here, which I buttressed when we started the live session today, is that considering the fact that this is the last trading day of the week and the last trading day of the month, it is most likely that majority will want to be doing some profit-taking activity, especially those who had actually sold at this point. We want to be doing some profit-taking, which will definitely incite a move that will contradict the previous move. So if a breakout of that trend line happened, then definitely we want to be part of that move to the upside. Now, what do we want to see that will give us the confidence to be part of that move? Now, scaling back down into the 1 hour time frame, let's quickly run through the expectations of a selling momentum in this market first of all. And this is as a result of the fact that price action has been bearish at least since the beginning of the week. Let's consider the potentials that sellers have here first of all. So at this point in time, since we have been seeing how the $74 level appeared to be a buying niche in this market in the last 48 hours, we will need a breakdown of that structure to give us a confirmation that sellers are beginning to gain that momentum here. And as long as price action remains below the bearish trend line, we shall feel comfortable in that sell position. So if you had not joined at the $75 level here, then you might want to see price action break down the $74 area. So as soon as the breakdown of the $74 happens, we scale down to our lower time frame, like your 10 minutes, your 5 minutes time frame. Look out for retest of structure confirming the strength of the sellers in this market. Then we could join that trend continuation to the downside. And remember, we're still within that TP target zone that still extends to as far as the $70.50 level, which will be dovetailing to at least about 360 pips potential if a selling momentum breaks down that $74 area. So let's be on standby to catch that opportunity. Now, what if the opposite happens in this market and bullish pressure begins where sellers find it difficult to break down the $74 area? Then to buy the US oil today, I would rather wait for price action to break out of that $75 level, which happens to be the resistant line for this channel that we identify here. Now, if a breakout of this level happens, we want to be on a lower time frame to look out for more confirmation, like a retest of structure. You all know whenever we have a breakout of a key structure like this, we need some confirmation like a retest of structure, the appearance of buy pressure right around or above the $75 level to give us that confirmation to be part of that bullish move to the upside. So this is how we are going to be buying the US oil for today. And if price action continues to the upside, remember that we have a key structure here at the $77.69 level, which happens to be a very strong demand zone at the beginning of the week. So if price action gets into that structure, definitely we want to be moving our stop loss to secure positions as we wait out and see how price action will be reacting to that level to decide if we are going to be adding more position to our existing trade or getting ready to join another wave of bearish momentum to the downside. So these are my views here on the US oil for today. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on the US oil. So on this note, these are my views here. If you have any questions, let me know right in the comment section. And on that note, I will be moving on to the next pair. So the next option we are looking at this morning is the US Tech, and in the last 24 hours, the US Tech happens to be one of the most profitable trade for us in our watch list, as we can see our price action finally broke out of that trend line to trigger our buy position, and price action moved significantly well. It's in our TP target at a 13,220. So let's quickly run through how the week started so that we can have a background knowledge of how we got to this point. So this was where the week started here. The week started at around the 12,985, where we had selling pressure around that area, making that level our resistance point. We had a whole channel figured out at this point. Then we had a buy position initially at the beginning of the week, which actually moved about 60 pips thereabout in our favor before the sell pressure resumed. And obviously we moved our stop loss, secure the current position before the sell position took us out of that trade. Then we saw another signal in the form of a bearish signal after the breakdown of that support line there at the 12,930. We saw price action come back to retest of structure, after which we joined the bearish move to the downside. We had a position at the 12,930, the breakdown of that demand zone at the 12,890 and the 12,800 to add multiple sell positions in that regard. And during our live session yesterday, we acknowledged this also choppy situation that has been happening here, as majority are still looking forward to the interest rate decision coming up next week. And following the GDP data, which came in below expectation yesterday, there is a high chance that we are going to be having an interest rate hike next week. And as a result of this, we have seen how the market has been reacting in anticipation of this event. And what we saw here during the live session yesterday was we acknowledged the fact that price action has been bearish since last week. And to further emphasize the strength of the sellers in this market, we connected the series of lower highs to give us this bearish trend line. And with this trend line figured out at this point, we agreed here that the trend line is going to be our guide for trading activity for the later part of this week. And what we said here yesterday is that we are going to be looking out for selling opportunities as long as price action remain below the bearish trend line. And what we agreed here yesterday is that we want to see price action drop below the 12,890. If it drop below the 12,890 happen, we would have seen price below that demand zone, giving us an opportunity to sell when we start seeing retest of the structure, then we could join the decline to the downside. So that was our selling expectation in this market, which never happened. And we also agreed here yesterday, if that does not happen, if a breakout of the trend line happens at the 12,930, this key level here, which was also our support line at the beginning of the week, a retest of structure on our lower time frame will give us an opportunity to be part of that bullish move to the upside, which is exactly what happened here during the, I think, a couple of hours into the New York session. We saw this whole situation happen, giving us the privilege to be part of this bullish move to the upside. Then we also laid emphasis on that $13,000 mark, which happens to be another key level that was identified on the daily time frame, where we had another buy stop order to trigger another buy position. So we had two positions running on the US tech, and price action hit our TP target at the 13,220 level, which happened to be a significant resistant line on the daily time frame. We are going to be looking at that in a moment. So we had 300 pips on our first position and 220 pips on our second position, giving us a whopping over 500 pips in profit on the US tech. And for those who have been part of this profitable trade, well done to you for being on standby to catch this move. And right now, what is going to be our next line of action? Well, before we go into the details of what our expectations are for today, I would love to share with you the holistic perspective in this market by scaling up into the daily time frame, and let's see what this whole structure we have here on the 1 hour time frame looks like on a much more higher time frame. Now, scaling up into the daily time frame, this is what we have here. And remember, we acknowledge this whole bullish structure at the beginning of the week. So let's run through what this whole thing look like at this area. So focusing on trading activity since the beginning of the year, you will observe that price action has been very bullish, and as a result of this, we have an ascending channel to further emphasize the strength of the buyers in this market. So we have the resistant line of the ascending channel here after connecting the series of higher highs, and then we have the support line of this ascending channel after connecting the series of higher lows. Now, this whole situation continued until the beginning of this month, when we finally saw price action break out of that key level at the 12,800, which happens to be the first time price action will be breaking out of that structure in the last 5 months. And since the breakout of the structure here at the beginning of this month, we were hoping that this whole situation here will turn out to be a very significant signal for a bullish momentum. But unfortunately, we saw how sellers continue to negate every bullish attempt around the 13,220, now giving us a consolidation phase, which emphasized the indecision in this market at this point. So we have a situation here where price action was trapped within the 13,220 and the 12,800 level to finally give us a channel to work with. Now, you all know what we look out for whenever we have a flat channel. We want to remain patient for price action to either break down the channel for selling opportunity or break out of the channel for buying opportunity. And if we consider the strength of the buyers in this market, as we can see since the beginning of the year, price action had continued to find higher highs and higher lows. It is more likely that this whole setup here could turn out to be a trend continuation pattern in the form of a bullish rectangular pattern, probably, where this whole situation here will transition into the breakout of the 13,320 to incite the continuation of that bullish momentum to the upside. So breakout of the 13,220 definitely will be a very beautiful signal for us to continue to buy the bullish momentum at this point. Now, with this whole situation we have here, yesterday's trading session saw this bullish candle, engulfing candle, bringing us back into the resistant line, which is a sign that reveals the presence and strength of the set buyers around the 12,800. Now we have this whole situation where we had the retest of the 13,200 where sellers has been trying to negate all bullish attempt at this point. So we shall be scaling back down into the 1 hour time frame to see how participants in this market has been reacting to the $13,220 mark since yesterday's trading session, to give us a clue into what to look out for today. So now going down back into our 1 hour time frame, this is what we are going to be doing here. So we want to acknowledge the setup that has been going on here since price action tested the $13,220 mark. So we have this whole situation here, and for the sake of clarity, can we not scale down into a much more lower time frame to give us a better perspective? But before I scale down to a much lower time frame, it's important we acknowledge the bullish momentum that started this week. So this impulsive move started at around this area, had a 12,800, which is the support line of that channel we identified on the daily time frame. And we saw this whole impulsive move broke out of significant structures like the 12,890 and the $13,000 mark to get into this level. And we all know from a technical standpoint that whenever price action breaks out of a significant structure like this, there is a high chance that price action could still come back to do a retest of that structure, as majority who are taking advantage of this buy position at a very cheap price at the 12,800 or the 12,890 or even the $13,000 area would want to be doing some profit taking activity, which would reflect on the chart in the form of a retracement to the downside. Now, yeah, we are looking forward to this whole situation here where price might likely retrace back into a structure that was broken out of, like the $13,000 mark, to incite a trend continuation, or even go to as far as the 12,890, which happens to be the trend line that was broken during the course of yesterday's trading session. Remember, we had a trend line figured out which has been supporting this bearish momentum since last week. We saw the breakout of that structure, so we might likely see price action come back to retest the structure before the second wave of the bullish momentum happens. So all this is what we are going to be taking into consideration. But before we start considering the potential of a retracement into the downside there, we need to be able to identify if this whole structure we have here will transition into some bearish momentum. So in that regard, we want to scale down to our 15 minutes time frame, where we want to see what is really going on within that consolidation phase. So now right now we are back into the 15 minutes time frame, which is a much more lower time frame where we can see things more clearly. So what I will be doing here is to bring out my line chart and first of all identify a key level which falls exactly at the $13,120 mark. So we have the 13,120. So let's figure this one out here. Okay, hold on a second. All right, so 13,120, I guess. So let's label this area for the sake of clarity. 13,120. Place it at the top right hand side of our screen. Okay, good. Now we should have the resistant line of this channel, which falls at the 13,150. Okay, 13,150. I give this a dark green color. Then we should have the support line of this channel at somewhere around here, which is around the 13,100. So things will get a little bit clearer now when we bring back our candle chart, but let's figure and map this out first. Then in addition to this whole structure is the fact that price action has been bearish since the later part of the New York session yesterday. So we should acknowledge the lower highs too as well, hereby giving us a bearish trend line to work with. Beautiful. So we go back to our candle chart right now, and here we go. We have a simple setup that we are going to be using to guide our trading activity for today. Now, how do we intend to take advantage of this move? Now, first of all, we acknowledge the fact that since price action tested the $13,220 mark here yesterday, we have been seeing lower highs and lower lows in this market, which might result into the beginning of a retracement phase in this market. But we are not going to be looking for a retracement unless we have a breakdown of the 13,100, which happens to be the support line of this old channel that we have here. So we want to see price action break down, retest the 13,120, where price will definitely be below the trend line, which is where we are going to feel comfortable in a sell position in this market. And if that happens, then we want to be part of that bearish move to the downside, which will then turn out to be a retracement of that impulse leg. Then we should be having a TP target within those zones we identified on the 1 hour time frame around the $13,000 mark, the 12,930 and the 12,890 as a TP target zone for this potential move to the downside. So that is how we are going to be selling the US tech for today. However, if price action breaks out of this key level here at a 13,120, as you can see here, it would have broken out of this trend line. So the trend line here, which has been supporting and negating all bullish momentum in this market here, would have been broken out of if price action breaks out of the 13,120. And if a breakout of the 13,120 happens, and as well to have broken out of the trend line, then at this point we want to see this as a reversal pattern. And remember, we are not getting too excited here, as we still need some confirmation to give us that confidence to be part of that bullish move. But you could have your buy stop order right there anyways, and have your sell stop loss somewhere right below the 13,100, which will be dovetailing to about 25 pips thereabout, which is not bad at all. But if you are a conscious trader, you might want to wait for price action to do a retest of the 13,120, retest of that key level at the 13,120 area and the trend line. Look out for buying pressure on our lower time frame, then we could be part of this bullish trend continuation to the upside. So this is the only way we are going to be looking out for buying opportunity in this market. And if price action continues in such a way that it breaks out of the 13,150, then we will have no choice than to look out for more opportunities to add more position to our existing trade. So these are the ways that we are going to be looking out for buying opportunities. So for the sake of clarity here, let me replay what our expectations is looking like for today. So we have a structure at a 13,100, which is just right below the bearish trend line, which will confirm selling opportunities in this market, where price will remain below the trend line, where we shall be looking out for more selling opportunities in this market. So the $13,100 mark is serving the purpose for selling opportunities for us in this market, while the $13,120 mark is serving the purpose of buying opportunity in this market as soon as price breaks out of the 13,120 level. And I laid emphasis on the fact that if price action breaks out of the 13,120, it would have broken out of that trend line too as well, hereby negating how strong the trend line is for sellers again in this market. So we shall be looking out for buying opportunity above the structure and look out for more opportunity to add more position to our existing trade at the breakout of the 13,150. So this is what we shall be looking forward to on the US tech for today. So it's quite a simple setup we have here on the 15 minutes time frame. So you might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So that is that on the US tech for today. If you have any questions, feel free to drop your inquiries in the comment section, and I'm here to be of help in that regard. So moving on right now, we are going to be going into the next pair, which is the GBPUSD. So what we have observed on the GBPUSD pair since the beginning of the week is the fact that price action has been very choppy in this market. And one thing we can see here since the beginning of the week is the fact that price has been trading or trapped, let me say, within the 1.25060 level and the 1.2410 area to give us a consolidation phase, which further emphasizes the strength, the indecision in this market. Now, at the beginning of the week, we had an opportunity to buy. So we had this whole setup figured out at the beginning of the week where we saw price action trapped within this range with the below our key level at the 1.24550 area and the 1.24100 area. And you all know what we do whenever we have this kind of simple setup. We want to see price action either break out of the resistance line for buying opportunity or break down the support line for selling opportunity. But what happened instead was the breakout of the neck of the key level at the 1.245 to trigger our first buy position for the week. And in fact, we were part of this move as price action moved about 55 pips in our favor before the sell pressure began. And remember, we had a bullish trend line at the beginning of the week after we connected a series of higher lows when we were thinking that this trend line would be a sign that we might be going in for a bullish momentum this week. But the breakdown of the trend line here, which also shares a confluence with our key level for the week at the 1.24550 level, was another signal that sellers might come in. So we had a sell position triggered here. Price action moved for about 60 pips thereabout again before we were taken out with a small profit in this market. And since the breakdown of this trend line happened, we thought and assumed that since price action has broken down of this trend line, that we might likely see price action retest the structure at one point, which it actually did on Wednesday/Thursday. As you can see here, price has been retesting that trend line in the last 48-72 hours in this market, with the hopes that price action will still continue to the downside. So it's looking more bearish at this particular point in time. And to further emphasize the strength of the sellers in this market, the first thing you will observe within this channel is the fact that since the beginning of this week, as soon as price gets into that 1.25060 level, we saw our sellers jumped in to negate all bullish attempts in this market. The same thing also happened here on Wednesday. We saw how that level was negating bullish attempt, and in the last 24 hours too as well, we have seen how this level too has been negating that bullish attempt. So we have a very strong supply zone around this area where buyers have found it very difficult to even break out of that level. So I've been able to identify a simple setup on a much more lower time frame, like the 30 minutes time frame here, which I think we can use to guide our trading activity for today. So what was I able to come up with? So we had this whole structure figured out here. So I have a supply zone already around the 1.25100 area. As you can see, since the beginning of this week, we have been seeing selling pressure come in from that structure. So if we are going to be acknowledging this supply zone, then definitely we want to be seeing selling opportunities come in at any point in time. And during this morning's session, during the UK session this morning, the beginning of the session, I saw this whole setup where I joined the sell momentum right below the 1.24850 with a stop loss somewhere around the supply zone here, which dovetails to about 30 pips, with the hopes that price action will continue to break down key structures like the 1.246 and the 1.2440 level for more selling opportunities in this market. So this is what I will be looking out for. So for those who had missed out on this opportunity here, I will be advising that you have a sell stop order below the 1.24600 area and the 1.2440 area to be part of a potential move to the downside. Now, you all know what we do here. Even though we are holding on to a bias, we still want to take into consideration the potentials of the buyers in this market. And when you look at the structure since the beginning of this week, you would observe that price action has been finding higher lows in this market, though we have yet to find a higher high. As we can see, the supply zone at the 1.25 has been negating that attempt. But we have higher lows here. When we connect a series of higher lows, we have a trend line that we can use to guide our trading activity for today. So what this simply means is that as long as price action has broken down that trend line and price remains below the trend line, we shall be looking out for more selling opportunities. And look at what we have here. We already have a breakdown of that structure. So let's see this as a potential retest of structure to happen. And if price action continues with a sell pressure, then a sell stop order below the 1.246 will trigger a sell position. And as long as price remain below that trend line going forward, we shall feel comfortable in our sell position. Then we look out for more opportunities to add more position to our existing trade. However, if price action goes back above the trend line, which it is right now, and this whole situation continues in such a way that price action continues to find higher highs, well, my advice at this point is that we want to remain very, very patient. The reason is this: we have a very strong supply zone here. So even if we start seeing buy pressure around this area, we need to be very mindful that the sell supply zone here still has a potency of negating that bullish attempt. So what we want to see on this chart that will support a bullish momentum here is to see price action take out that supply zone. That is, we want to see a breakout of that structure happens, so you could have a sell stop order below that structure to be part of that bullish move to the upside. And if we are lucky enough, we could see price do a retest of structure. It could even come to as far as retesting the 1.24850 level. By pressure around or above the supply zone, then we could be in to add more position to our existing trade. So this is what we shall be looking out for on the GBPUSD chart to buy the GBPUSD today. So if price action continues to remain below the 1.2500 area, we still look out for selling opportunities, but a breakout of that supply zone definitely will be a signal that we want to be having a trend continuation to the upside. So I wish we'd be on standby to catch this move. Munch my screen if you can, so that you can use it as a reference point when you're about to make your individual decision on this pair. So if you have any question, let me know right in the comment section, and rest assured that I'm willing to be of help. So in that regard, I will be moving on to the next pair. So the next pair we shall be looking at today is which one is that? XAUUSD. The XAUUSD was one of our profitable trade yesterday as we hit our TP target on the XAUUSD, scooping over 200 pips in profit. So now let's run through how yesterday went by for us on the XAUUSD. What did we see on this chart yesterday that made us to think of selling the XAUUSD? So I will zoom right into the structure we identified yesterday, which is just right around that $2002 mark and the 1,998. So this was what we were able to spot and map out on this chart during our live session yesterday as we got prepared for the New York session. And we looked at this whole scenario and said we are going to be looking out for selling opportunity. Now with this whole situation here, we said we continue to see selling pressure within the 2002 and the $2,000 mark, which further emphasized that sellers are still very strong in this market. And I told us all yesterday that if price action breaks down the trend line, retest of structure at any point in time, we look out for selling opportunities to join that decline to the downside. And with a sell stop order below the 1,998, we want to be adding more position to our existing trade. And this was exactly what happened here, as prior to the GDP data yesterday, despite the negative variance, as the data came in below expectation, the dollar rose significantly well, breaking down very important key structure to test the 1975 area where our TP target was placed during the live session yesterday. So we had this whole situation figured out. So congratulations to those who are part of this bearish move on the XAUUSD. Well done for being on standby to have caught that move. So now with that being said here, let's dive back into the 1 hour time frame so that we can project what to look out for today. So going back into the 1 hour time frame, so this is what we have here on the 1 hour time frame. And remember, we have this bullish trend line which has been supporting this bullish momentum since Friday last week. So we connected the series of higher lows here to give us this bullish trend line on your screen. Now yesterday we saw the breakdown of that structure, and from a technical standpoint, whenever price action breaks down a key level like this, we expect that one point in time price will do a retest of that structure to incite another trend continuation to the downside. And since the later part of the New York session yesterday, we have been witnessing this continuous rejection of that trend line with the hopes that price action will continue to push to the downside. So this morning I had a sell stop order below the $1,985.50 level to join this bearish move to the downside. And before the beginning of the live session, I already moved my stop loss to secure this position at my entry point as I continue to monitor price action. Now things are getting very interesting at this point, and what is that you can see on your screen right now? Well, the first thing you will observe here is that the nature of the test of the 1975 was very aggressive. As you can see, the nature of that candle, the test of the 1975 shows that sellers were not comfortable within that zone. As we can see, our buyer sharply took out all the sell positions there again, giving us something that looks like a hammer candle. And one thing you would observe here in the last 4 hours in this market, you will see how the 1981 level has been a buying niche in this market. So every attempt by the sellers to break down the structure has been met with strong resistance at the 1981. And in fact, yesterday that area also gave us a clue into some buying presence around that area. So the inability of price action to find a new low in the last 18 hours is a sign that buyers are probably gaining some momentum at this point. So in that regard, we might likely see a reversal pattern here. So if we consider the impulsive move that got us to this point, we will definitely be having something like this. The first touch here, price is here to break down the previous low here, and this might likely transition into a reversal pattern, but it is not yet confirmed that this is a reversal pattern here, as we still need some validation to hit. And you all know what we do whenever we have identified a potential pattern evolving into what looks like a reversal pattern. The next thing we want to be doing is to identify the neckline upon which we are going to be using as a guide to buy at that point, and also validate that reversal pattern that we just identified. So right now we want to identify the neckline which falls exactly at the $1,090 mark area, which will definitely be serving as our key level for today. So we have the 1990 level figured out here. Let me place this at the top right hand side. Then we have this like a golden color, and here we go. So we have a neckline sitting around this area. So what we are going to be doing here to buy, considering the buy pressure we have been witnessing here in the last 18 hours, it's very likely that buyers could take over this market at any point in time. So to buy the XAUUSD today, I want to see price action take out the 1990, break out of the 1990 level, and if possible we start seeing some buy pressure above that structure, then we are in to join that move to the upside. So we could have a buy stop order above that structure so that we can catch that move, and then with that whole scenario there, we have a stop loss sitting somewhere right below the 1985 level, which will dovetail to between 50 to 50 pips thereabout. And let's see how this move is going to play out in the next couple of hours. So that is how we are going to be buying the XAUUSD. Then another thing I would like to state here is that instead of waiting for price action to get into the 1980 before buying, is it possible that we see an opportunity to buy earlier than that so that we can maximize our profit, so that before we get to that 1,990 we're already in a buy position, and if price action now breaks out of the 1,990, then we will be triggering our second position. And to do that, we want to scale down to our lower time frame to see how this whole structure here has evolved in the last 3 hours. So to do that, we scale down into the 15 minutes time frame, and this is what we looked at on the 15 minutes time frame. I would rather use a new chart here so that we can see things clearly. So let me bring out a new chart to use from this current structure. So I will remove all drawings here, and let's look at this critically well. So I will zoom things in a little bit. So this is the 15 minutes time frame. And what you will see, you can see that we have been witnessing some buy pressure. We have been seeing some higher lows in this market. We have been noticing some bullish pressure coming in gradually. So what we are going to be doing now is to bring out our line chart so that we can have specific points of connection, and then we have the neckline of the structure sitting at the 1,984 level, which I will place right here. And then we have 1,984 level. Okay, so we have this figured out at this point. Then we also have a trend line which has been okay, we have a trend line. We will do some readjustment to that one when we bring back our candle chart. So this is what we have at this point. So bringing back my candle chart right now, we do some readjustment to suit in the current structure. So we have this beautiful trend line figured out, and then we have this 1,984 level also figured out at this point. So what we are going to be doing here, so like the reversal pattern we identified on the daily, on the 1 hour time frame earlier, where we had a neckline area, I said let's look at the lower time frame to see if we could actually join that bullish momentum even before the breakout of that neckline happens. So that is why we are here on the 15 minutes time frame, and what we are going to be doing here is to wait for a breakout of this level happens. Remember, we are not getting too excited at this point, and then look out for a retest of the structure, buying pressure above the 1,984. Then we could join that bullish momentum to the upside. Then we have a buy stop order above the neckline that we had on the 1 hour time frame to give us that opportunity to buy in this, to add more position in this market. So that is how we are going to be looking out for buying opportunity here. However, if the contrary happens here and price continues to drop to the downside, then we want to take into consideration that 1-2 so that we can be part of that move when it finally happens. So we should have a key structure here at the 1,982, which will be serving as a yardstick for selling opportunities today, so we can actually join early enough before a key structure is broken on the downside on the higher time frame. So hold on a second, we shall still go back into the higher time frame to see all this setup figured out. So we have this whole situation here. In fact, I'm going to do some readjustment here. So it's actually 1,982.50 level. So that is it there. So if a breakdown of this trend line happens and the 1,982, then we'll have no choice than to look out for selling opportunities in this market. So try to screenshot the screen here. We are going to be using this to catch a very move early on the lower time frame, while I move back to our 1 hour time frame to show you how we are going to be hold on a second. Okay, so this is where we are right now. So this is where I was talking about here. So we've already identified the setup here on the 15 minutes time frame to catch any buy opportunity if this whole structure turns out to be a double bottom structure, where we already have a neckline at the 1,990. So if we had that privilege of breakout of the 1,000, breakout retest of the 1,984 level, then we buy at that point, then hoping that price action will continue to the upside. Then if it breaks out of the 1,990, we definitely having another buy position at that point. So that is how we are going to be buying the the XAUUSD for today. Now, selling the XAUUSD, I already shared with you out we can sell earlier enough before even the breakdown of the 1,981 level happens. Remember, this level has been a very strong buying niche in the last 24 hours here, so we still need a confirmation that the sellers are still very strong in this market, which would reflect on the chart as a breakdown of the structure. So let's wait for this breakdown of the 1,981 to happen for us to add more position to our sell trade. And for those who have been with me on the sell position here, I told us all to move our stop loss, secure the current position by moving our stop loss to the entry point at this point. So let's see what happens going forward from this current structure. You can also screenshot this one so that you can use it as a reference point when you're about to make your decision on this market. So that is that on the XAUUSD. If you have any questions, let me know right in the comment section. So we shall be moving on to the last pair for today, which is the USDJPY. And the USDJPY is one of the, I think at this point in time, I will call it the most profitable trade after the USOil for this week on the USDJPY. So let's quickly run through what really happened in this market since the beginning of the week and how important the 133.800 level was for us during this week. Remember, we had this key level identified at the 133.800, which was as a result of that neckline we identified on the daily time frame. And in fact, since the beginning of this week, we saw our price action has been on a bearish move, and then we had some sell position at the beginning of the week, and this trend line here was guiding our selling activities in this market. And remember, yesterday I told us that we have a potential reversal pattern on this 1 hour time frame, where I spotted a head and shoulder pattern. Remember, where I spotted this structure here where the 133.800 was also serving as a neckline of that head and shoulder pattern. And you all know what we look out for. A breakout of the neckline retest of structure definitely will give us a confirmation that we are going bullish in this market, and that was exactly what happened in this market. And we saw how massive that move went for us, giving us quite a lot of profit in this market. So breakout of the 133.800 and the breakout of that trend line, which was supposed to be our key level for the week, triggered that buy position for us, making us profitable on the USDJPY. And remember, we also had key structures that I told us to place buy stop orders. We had structures at the 134.170 where we said we are going to be adding more position to our existing trade. Then we also had more position at the 134.480 and the final one here at the 135.00 area. So we had a maximum of 3 positions at least in this trade, and right now price action is within our TP target zone that we identified here. So some of us will have been taken out of our position right now, and some of us will still have a position running at this point. So the first position on this one had about 250, second position had about 210 pips, and the third position had about 137 pips. In fact, it has been quite a profitable week for us on the USDJPY, though it took quite a long time before this whole massive move happened. That is why it is very important that we remain very, very patient, waiting for our structures to mature before we begin to be part of a move. So kudos to everyone who has been on this profitable move in this market. Well done to you for being on standby to have caught that move. So at this point, majority will have taken their profit, as we already within the TP target zone we identified on Tuesday. But if you are not yet taking your profit in this market, then it's very important that you move your stop loss right now to secure the current position, and you wait out and see if price action is going to be breaking out of that TP target zone for more opportunities to add more position to your existing trade. So quickly do that right now. Move your stop loss, lock in some profits if you are still in a buy position in this market. So before we go into the details for what to look out for today, I would like to share with you the daily time frame and for those who are not part of our live session prior to this one, so that you can also have a background knowledge of how we got to this point and why we made a decision of buying the USDJPY. So right now we are back into the 1 hour time frame, and this is the 1 hour time frame where we acknowledged at the beginning of the week how important the 131.00 level has been for buyers in this market, and this whole situation here lasted over a year in this market. Now when we zoom into the current structure, I'm going into what happened in the month of February this year. We saw the breakout of this trend line here. Price action broke out of the trend line, and following the technical expectation, we saw our price action retrace back to retest the trend line to give us a confirmation that we might be in for the second wave of that bullish momentum. And luckily enough for us, we were able to spot a reversal pattern within this area here. So following this impulsive move to the downside, we spotted this reversal pattern in the form of a double bottom structure, and immediately we identified that we move closer to check out for a neckline, which we shall be using to guide our bullish momentum going forward. And that is where the 133.800 level came in. That is the level I showed you on the 1 hour time frame. So prior to last week's trading session, we saw the breakout of that neckline, and in the last 24-40 hours, we saw our price action came back to retest the structure. Price was trading along this trend line yesterday, and I told us all that with this trend line still holding the bullish momentum, we might likely be seeing a massive move from that area. So I told us all to make sure we have a buy stop order above the 133.800 so that we can catch that move as soon as it happens. So that is what we looked at, and thank goodness we were able to be part of that move. And once again, congrats to everyone. So right now you can see how important the 133.800 level is and how it has been a major decisive factor in giving us this bullish opportunity we took advantage of yesterday. So right now, when we scale back into our 1 hour time frame, what is going to be our plans for today? First of all, let's go to the 4 hours time frame and see what is going on there. So this is the 4 hours time frame, and price is already within our TP target zone, which was, how did we get the TP target zone? What we did here was to use our Fibonacci retracement tool to run through this impulsive move here and aimed at an area between the 127.2 and the 1414, which gave us this old structure. So at this point in time, there is still a very possible chance that we could be seeing a retracement phase anytime soon into a structure before another wave of bullish momentum will happen. So at this point in time, if you had missed out on this opportunity, I would advise you to remain patient, as it wouldn't be reasonable or advisable to jump in front of a moving train at this particular point in time. So if you had missed out, it's okay, there's no problem. Let's wait out for structure. There's still quite a lot of opportunity in the financial market that we could take advantage of. So let's see what happens afterwards. We already have a breakout of a significant structure at the 135.00 level here, and you all know from a technical standpoint, there's still a chance that price action will come back to do a retest of that structure, probably in the form of a retracement into structure before another wave of bullish momentum will happen. So let's remain patient here. At this point in time, I wouldn't advise you to be buying or selling here. Let's hold on and see how price action will react to this 136.200 zone here, which is our TP target zone. And if we start seeing something like a reversal pattern here, like a double top structure, then we identified a neckline where we shall be using the neckline area as a platform to be part of that counter trend opportunity. And let's see how far that move will go. If it goes as far as the 135, the 134.80, depending on how far it goes, will now determine where we are going to be buying the second wave of the bullish momentum. But if the case is the opposite of what I just said here, and instead price action transitioned into something that looks like a trend continuation pattern, maybe a bullish rectangular pattern where a breakout retest of structure in our lower time frame happens, then we might be in to add more position to our existing trade. So these are things that we are going to be looking at today. So in the meantime, if you still have a buy position running, move your stop loss, secure the current position, and let's wait out for the next 2-3 hours for this old structure here to mature for another trading opportunity. So it's on this note I will call it a day here. It has been a wonderful moment with you guys here, and I hope I was able to simulate all the potential trading opportunities that could likely happen today during the New York session today. And for those who still have open positions running, ensure you move your stop loss accordingly to lock in some profit here, and let's see how far this whole thing will go as we head into the last hour of the trading week and the trading month. On this note, I wish you best of luck today. May Gigi, I see your comments. Thank you very much. I wish you too a wonderful and blissful weekend. On this note, I wish you best of luck during the New York session, and we shall be seen on the other side. So looking forward to see you same time on Monday, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review and have a fresh new look at the chart as we get prepared for the new month. Do have a wonderful day, everyone, and a wonderful weekend to you too. And for my newcomers out there, I hope you are able to gain one or two things here. But trust me, try to join us next week, and I assure you with time you get to understand how this works, and you will be able to use the information you have gathered here to make your individual decision. Do have a wonderful evening once again. Bye bye.